Good morning, Steve Reed with the morning grain comments. We have mostly lower trade with beans down 5 cents, corn about unchanged, and wheat's unchanged. Outside market stocks are higher, dollars lower. Crude's about unchanged at $82 a barrel, while gold, silver, copper are up. Coffee, cocoa, sugar, and cotton are also higher. In the grains, there really wasn't any good reason for yesterday's rally in the beans, except maybe some of the machines were evening up after Friday's losses. The export inspections were kind of in line with expectations. U.S. soybean exports right now are running about 19% below last year. USDA is looking for a 12% decline. China soybean meal values are lower, which means their crush values are lower, and the opposite end of the spectrum, palm oil is higher due to talk about lower Indonesia supply. We did note that there was overnight news of mystery illness across the southern parts of the U.S. affecting the dairy herd. It's been confirmed as avian flu. USDA says the milk is safe, but we'll see how widespread this is and if it has any impact on feed usage. We noted that the Argentina soybean crop was rated mostly favorable with dry conditions. Brazil, still a wide spread between what private thinks the Brazil crop is and what the USDA says. Some of the experts feel it's mostly in acres, where the USDA might be double counting some acres. And also the USDA has a higher Brazil yield than the private people. Corn exports up 34% from last year. USDA is looking for a 26% increase. Argentina corn harvest is just beginning. And we also noted that the Brazil safrinha crop conditions are mostly favorable, but a third of the safrinha crop acres are drier than normal. Dalian corn futures continue to slip lower because of the higher Ukraine imports. It is interesting to see that Ukraine finally said that damage to their energy infrastructure could slow some of their logistics. But China buying and this slowing of logistics is actually supporting Ukraine prices. Matif corn futures were down because of increased selling. We also noted that historically, when we look at U.S. corn exports, they tend to peak in May due to competition from South America. U.S. South Plains is dry while there's rain in the east, the southeast, and snow in the north. Wheat exports are down 15% from last year. USDA is looking for a 4% decline. And despite some dryness, you looked at Oklahoma rating at 70% good to excellent versus 34 last year, and Kansas 53 versus 19. Australian and Matif wheat futures are all lower, searching for demand, and we look at the Russian situation might have to be priced in as far as 400,000 tons of wheat exports not getting export documents. But Russian prices continue to be lower than the rest of the world, and they are where most buyers should continue to look.